Hello, YouTube family. Once again, it's your boy Kimo Kamisha. So I just remembered that there's someone in the comment section who wants us for me to explain how the strategy that I'm using works. Actually, the way that I'm trading, I got this from someone. Currency Bros. I think it's Ara. Yeah. So on Currency Bros. So basically, this strategy is just simple, man. You're trading like it's either trading a continuation of a trend, or you're trading a reversal, of which is a change of character, right? So basically, this is how the strategy works. Let me try to be quick as possible. I don't think I'm gonna edit this video. It's just gonna be plain and simple. So let's say we are in a series of high highs and high lows, indicating that we're going up, right? So basically, what happens is on a series of highs and high lows, you keep on having what you call break of structure and break of structure. And if you know on smart money concepts, you have what you call supply and demand, right? But in this case scenario, we don't need that. We don't need to have our supplies and demands in supply or demand or other blocks in place, because you don't really like supply and demand. But our entry criteria is indicated by certain things, right? So maybe you have like a demand at this point, but instead of me entering on that demand zone, right? Now that we have a break of structure to the upside, okay, we're gonna have, because the market is not perfect, it doesn't just go straight up, straight down and up like that. It keeps on playing on and on like this. So let's say here we are having a reversal whereby the market is coming back, right? So what I'm gonna do is I'm gonna check for this is the previous low, and then this is our current high. So basically, what I'm gonna do is, instead of entering from that demand zone, I use this 75% zone in my Fibonacci tool, right? I'll also show you the settings to my Fibonacci tool whereby you can replicate them and use them. Some people prefer using 71% on the Fibonacci zone, but I prefer using 75. Reason being, I want to have like a 1-to-3 risk ratio reward each and every time. So this is how the strategy works, right? This is the first example. And also, if you are selling, it's vice versa. You do the same thing but in an opposite direction, right? So this is my strategy, the one that I'm using. So basically, let's say we're having buys here, we have this high, we have this low, and then this high is broken, and then we respect this low, we continue going to the upside. This is what's going to happen, right? And again, another scenario, let's say you're having a change of character. This is where like my liquidity comes into play, and and so forth. So let's say you are having a series of buys, right? Buys, okay, you're having high highs and high lows, but instead of like this high being taken out, we're having a sweep of liquidity, right? So basically, what I mean here is that break of structure wasn't a successful one. So basically, we have swept liquidity from the upside, but you can never know if liquidity has been swept, like, because sometimes you might think it has been swept, but then the market returns here and goes to the upside, right? So what I would simply do is I would simply wait for market to go down here and take this low out, right? But let me draw it like perfectly so that it can be clean. I prefer much has been clean. So we take out this low, and then we continue selling. Then we're gonna have like a series of corrective buys here, and then at this point we are having a change of character because this law was violated, even if it doesn't mean like liquidity accept from the outside, from the buy side. But as long as like we're having a change of character here, we're just gonna place our Fibonacci tool again at this point, then from the previous high to the current low, right? And that doesn't mean market will tap here exactly and go to a direction, but it can come here and take out the suppliers left unmitigated and go to the downside. And this is how my strategy works, the one that I'm using. Actually, let me not say my strategy, but the strategy that I'm using, because I also learned from someone via YouTube, and yeah, this is why I'm giving like content for free also. So yeah, this is how I enter from this trade. Because if you place your trend line, if you're trading trend lines, you will notice that we are having breakout and retest in order for us to go to the downside as continuation of sales, right? So let me go to my Fibonacci tool, just double click that Fibonacci tool and show you. This is what I have. I only have 0.75 and 1. So 1 is 100%, this is 75%, and this is 0. Also this is 71%, but I don't use 71%. If you look at this, usually if I take my entry from here, from 71%, it's gonna be 2.45 RR. So basically if I risk 100 USD, I'm making 250, but here if I risk 100, I'm making 300. This is why I prefer using those numbers rather than 71%. I hope this makes sense. And this thing works on higher time frame analysis or lower time frames. For instance, if we go to this pair of which is USD CHF, we have like an extreme demand zone here. This is what I was talking about. It can come to that demand zone at the same time, but then in order for me to swing peacefully without even having to check the markets like now and then, I just use this thing. So you're having a break of structure, right? BOS break of structure, and I place my Fibonacci tool at this low, and then my take profit at that high. So if I place my entry, I could have placed my entry here and my stop loss at this low, and then having my target there. If you look at it, it's almost 1 to 3. I just have to place it perfectly. Yes, this is how it's supposed to be. So yeah, I hope this thing makes sense. Also, this was a continuation of buys. You see, liquidity was taken out at this point. Trend liquidity was taken out, and then it went straight to that direction. Please don't forget to leave a like, subscribe, and you can recommend people to my channel so that they can learn more.